revealed the SPY super system is the great Mr. David Wyse of Right Line Trading. Welcome back to Traders Corner, David.
Thank you very much. Appreciate it.
You're welcome.
Appreciate the nice introduction. Thanks so much. And I
appreciate you being here.
We really appreciate the folks giving up their Saturday to attend the webinar to try to help to improve their trading. So again, I'll get started here. Again, my name is Dave Wyse, and I have a Compass Options trading room, and we're going to cover that today. I also have an alert service. I'm also going to spend some time on basic options trading. I'm going to talk to folks who maybe don't know an awful lot about options, or maybe don't know anything about options. We'll spend some time on that, and I'm also going to go into what's called the SPY super system, which is a methodology we use in the room for trading the SPYs, the Qs, and the Russell 2000 indexes intraday, very quick trade. So we'll cover all of that. So again, thanks very much for attending. I appreciate it. We'll get started. Again, this is just kind of talks about the SPY super system. The Compass system is a piece of software that I will introduce to you here in just a little bit that runs on thinkorswim that tracks institutional buying and selling. So we know when the institutions are in the room, when they're trading and when they're not. I do have a live trading room that I monitor and run all day long from market open to market close, which is pretty unusual. We call out trades in there. We also answer lots and lots of questions from all the members that we have in there. And then we also have a text alert service. All right, first thing I need to do, of course, is cover the disclaimer that all signals and trading opportunities we provide are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, we'll just kind of get started here. If you have any questions, I'll just have to keep the chat box open. So if you do have any questions, I can look at them. But if you'd like to get some more detailed information, then perhaps I can give you. Then you can just go ahead and put your name and phone number or your Skype username in the chat box, and Rory from Right Line will follow up with you and answer those questions for you. He won't pester you. He'll just call you one time just to answer any questions. All right, so again, this is just kind of a graphic. We're going to see a lot of charts, et cetera. This is just a graphic of what the Compass system looks like running on thinkorswim. And the whole point of the Compass system is to track institutional money flow. Very important to understand if the institutions are in a trade that you're in or if they're not in a trade that you're in. It makes all the difference in the world. All right, and this is what the alert service looks like. The alerts I send out each day. Well, we don't have them every single day, but every day we have an alert. We'll come out to you. You'll get it on an SMS alert on your phone. I'm on the service, so I can monitor how long they take to get to your phone. I get them in about 10 to 15 seconds usually from the time that I actually post the trade. All right. First thing I want to cover, and I cover this in every webinar I do, because this is really, really critical. It's very important to understand who makes up the market. These little marbles here, these are retail traders, such as myself, and probably most of the people that are here are retail traders. And it's important to understand that when we're in the market, when just retail traders are in the market, when the institutions, which I'm going to talk about in a minute, this is a big marble up here, when retail traders are in the market and doing the trading, we have no ability to create a trend, change a trend. All we do is create chaos and chop when we're in a market. So if you're in a market and you're trading a stock and the institutions aren't trading that stock, this is what you're going to get. You're going to get a bunch of other retail traders battling against each other, and the results are going to be poor. You're just not going to have very good results. This is what we're looking for. These are the institutions. Now, the institutions, most people know they're made up of investment banks, Goldman Sachs, Morgan Stanley, JP Morgan, lots and lots of institutions are investment banks. Now, it's also important to understand that investment banks, they invest and they trade. Now, they'll have trading desks, which is actual humans that are trading, but most of their trading is done through what's called algos, or computerized systems. And about 80% of the trades that take place in the market today are being done by algos, or computerized systems. And this is what the institutions do. So the investment banks make up a lot of the institutions, but you have to add on top of that mutual funds like Vanguard and T. Rowe Price. They have hundreds of millions, billions of dollars to invest. Another one is hedge funds. There is a huge number of hedge funds that also trade, and they also have some algos running. And finally, big pension funds, police pension funds, state pension funds, firemen pension funds. All of these pension funds have massive amounts of money to put into the market. So our job as a retail trader is not to try to trade against these institutions. Our job as a retail trader is to know when the institutions are pushing a trade, either up or down, and join them. We're not going to take any money from the institutions. We're going to take money from other retail traders by having better information than they do. And this is what the whole point of having the compass system is to understand when the institutions are in trades and when they're not, and how we can determine that. All right, so this is a key thing to understand. Now, we in the room and on the alert service, I have a couple rules to trade by, fairly basic. Trade the best and skip the rest. Sounds really easy, but we just covered the first element of trade the best. Only trade stocks where the institutions are trading them. If they're not, don't trade them. And we want to skip the rest. And that's, again, when the institutions aren't making the trading a stock, we're not going to be in it. So we're going to be skipping those. And those are just not likely to be successful for you. I mean, you'll win some, but you're not going to have a very high win rate on those. And again, this is a kind of a key thing, and we talk about this in the room every day. Our objective is not to make trades. Our objective is to make money. And that's really important, because what happens is a lot of traders, when they're sitting in front of their computer, they always want to be in a trade. They feel like if they're a trader, they need to be in a trade. But since our objective is to not to make trades, but our objective is to make money, we're only going to be taking the trades that we feel have the highest percentage of likelihood of being successful. So we're going to skip a lot of trades. And so we do a lot of waiting, we do a lot of watching, we do a lot of looking at charts, but that's really important. Okay, now we need an edge. Any retail trader needs an edge over other retail traders. And our edges are pretty basic here. We have the right line compass system, which I'll show you, that lets us know if institutions are in the trade or not. We also then trade what's called relative strength and relative weakness. Now this shouldn't be confused with RSI. I don't use RSI, I just use relative strength and relative weakness. And that's by comparing the stock that you're looking at to the movement of the S&P 500 or the SPY, like on a 5-minute chart or 15-minute chart. If you have a stock that's moving up when the S&P is moving sideways or down, you have relative strength in the stock. And vice versa. If it's moving down and the market is moving up, you have relative weakness. That's going to give you a real edge. Because if you go to get in a trade and it reverses on you, which I'm sure everybody knows that'll happen, if you're trading a stock with relative strength, when the market reverses, it's not going to reverse as hard. So it's going to perhaps go sideways or down very slowly, gives you a much better opportunity to get out without taking any big losses. We also trade with a market trend if there is a trend. A lot of times you'll have choppy days, there is no market trend. So we just take the best trades we can find that the institutions are in. And then the final thing is to buy at support or near support and sell at or near resistance. And this means don't be chasing trades when they take off. If you look at the stock in the morning and it's shooting up, 10, 15, 20% in the first 10 minutes, and you have this fear of missing out. Everybody gets nervous that they're missing the trade. I'm missing this big trade, so I'm going to jump in. And they typically jump in right at the top just before it reverses, and the support level is going to be way, way down, and they're going to lose a lot of money just waiting for it to get to support. And most stocks, by the way, don't just go in one direction forever. They'll move up. There's no need to chase it because they're likely going to come back down to one of your support levels, and then you just wait for it. So that's why we buy at support and sell at resistance. All right, so the compass system, which I'll show you here, it identifies the highest probability trade setups while sidestepping setups that look good, but will fail more often than they succeed. And this is kind of what the compass system looks like here. I'll go into that in detail. But the compass system does this by identifying when institutions are driving the move and when they're not. If the institutions are driving a move, then we want to be in the trade. If they're not, we don't even want to trade. We don't want to be in it. The compass system does this by analyzing some complex trading data, and I'll go over that a little bit later as far as what it actually analyzes, but it analyzes complex trading data and displays the results in easily identifiable visual format, and you'll see how easy it is to identify when institutions are in trades when you see the compass system. And this visual element, and this is really important, I think, the visual element makes it possible for even new traders to find high probability trade setups. I mean, I have a lot of traders in my room that they're looking at specific stocks. I can't see every stock. They're looking at them, and they'll ask me about it. You know, in the room, what's this look like? And we'll look at it, and it'll be beautiful. They'll have institutions buying in there, and they go long in, and it's a perfect setup because they can identify it very easily. All right, so that's the Compass system. So this is how we get an edge over the retail traders. We're basically taking trades that are being driven by institutions, and I keep going over this, right? I've said this a couple of times. We're only in trades that institutions are in. It's important to understand that. We trade stocks that have relative strength or weakness versus the SPY or the Qs. If you're trading a tech stock like Tesla, you can track it against the Qs. And then we're going to trade in direction of the overall market trend if there is one. So again, how does this give us the edge? Here it is. Our trades are going to be supported by institutional buying or selling. Stocks will be outperforming the index, and they're going to be moving in the direction of the overall market. So huge edge. And these things right here are going to put you into a position where most of your trades, you know, well over 50%, probably 60 or 70% will be successful. Now, as we hone into this a little bit better, my win rate typically runs between about 88 and 92% from month to month, and I'll show you some of those results. All right, so but this is kind of just to give you some information on what I look for. In other words, what's a high probability trade setup? And I call this a funnel. Obviously, it's a virtual funnel. This is a process I go through just looking at a stock, the things I look at first. And I look at two things. I look at the daily chart and the 5-minute chart. And what I'm looking for is if I want to go long, I have to have a daily chart that's bullish. I'm not going to counter trend trade. I'm not going to go long a stock that's got a bearish daily chart. And the reason for that is if you get into a trade that's got a bearish daily chart and you're long that stock and the stock reverses on you, then you can't stay in it. I mean, you have no ability to stay in that trade very long because you can't take it overnight. It's bearish on the daily. You don't want to be in there. So we don't even take them if they don't have a good bullish daily chart. And then we want to look at the 5-minute chart and enter at a level in the 5-minute chart that's also bullish. So we've got those aligned. We're going to trade with the trend of both stock and market if we have a trend. But this one here, the compass indicators, is critical. So if I like the daily chart and it's looking good on the 5-minute chart, then I look at the compass indicators. They've got to be bullish for a long. The institutions need to be in it for a long, or selling it. They need to be in it for short. If the compasses system tells me the institutions are neutral on this thing, or there isn't that many institutions trading it, I'm not going to take the trade. And then we trade relative strength and relative weakness, and then we enter near support or resistance. So all of these things being equal, the stock's going to drop out the bottom of the funnel. It becomes a prospect, not a trade for sure, but a prospect. But if you just trade daily charts lined up, trade using the compass indicators, those two things alone will give you a pretty high win rate. All right, this is just, I just wrote this out just so you can see the funnel method that we just talked about. Again, the key here is the stock needs to have daily and 5-minute chart aligned, and the compass indicators must be aligned in the direction of the trade. Now, on the 5-minute chart, just so you know, because we'll be talking about this a little bit, the stock price should be above the VWAP, the volume weighted average price. This is something we'll show in a little bit. That is a volume weighted average price is something all the institutions use, and on a 5-minute chart, you want to be long only if the stock is above the VWAP, and you only want to be short if it's below the VWAP. All right, and so I don't need to go through the rest of these. The other thing is have patience. You want to be really, really patient. That's the thing that I preach the most in the room is patience. We've got to wait for the stock to come to us. We want it to line up and be at the levels we wanted it to be, so that we've got a much better chance of having smaller losses and getting in at a level where the stock is likely to continue upwards or downward if we're going short. Right, so those are the keys there. Now, just to kind of go over what we have in the room, the strategies we use in the room and also in the alert service. We do a lot of straight puts and calls, of course. We're trading options, so we're doing a lot of straight calls and straight puts. We use debit spreads using weekly options expiration. I'll use debit spreads using weekly option expiration. This is a pretty good strategy. I do what's called time spreads over earnings. So sometimes they're actually calendar spreads, but they're specific calendar spreads. Now these time spreads over earnings are non-directional. We don't care which way the stock goes. We're not trying to predict if the stock is going to go up or the stock's going to go down. What we're doing is we're taking a look at how much volatility there is in the stock options for this week versus next week, and we're taking advantage of that by capturing the volatility crush. And volatility crush is something that occurs just before earnings as the market makers jack up the price on the premium on the stock because they don't know how far it's going to move and they don't know which direction it's going to go. So they jack up the volatility, and we take advantage of that by selling calls for this week and buying calls for next week. That way we capture the volatility crush and the time decay difference between this week and next week. I have another one called the weekly ATM strategy. This allows us to capture premium by selling puts week after week after week against a stock that is strong or neutral to strong, but we keep a longer dated or a put. We have a long put that's out in time, maybe 4, 6, 8 weeks out in time. That's at a lower level to protect us in case the stock drops. And so we don't have much risk on those trades at all. In fact, all the trades we take are what's called they have a specific loss that you can take, maximum loss. It's called a defined risk. None of our trades have unlimited risk. Everything is defined risk. And I also do credit spreads to capture premium over week after week, if you're familiar with that. And then we have one other thing here called the SPY Super System, and I'm going to cover this today. This is a intraday trade. These are quick trades that we take in the room. I can't alert on these, but I take these in the room because they're much too fast. And if I have very high probability trades to catch the SPY or the Qs or the IWM on a 5-minute basis. And I'll show you what the results we've had with this and how we use the Compass system to show them, to find these. They're very, very easy to find. You just have to wait for the setups. Now the alert service that we talk about here, who's it designed for? Well, it's designed for doing day trades and short-term swing trades. All right, so this is for folks who don't want to be in the room or can't be in the room all the time, but still want to take some trades. So all the trades are going to be either intraday trades or they're going to be short-term swings, which I define as overnight to as much as 2 to 3 weeks. Those are short-term swing trades. We don't know how long we're going to be in them, but we do have a good amount of trades that we take in the morning and sell during the day, close them out in the afternoon. And again, it's designed for traders who can't watch the market all day or who don't want to watch the market all day. And you're going to get real-time alerts on the highest probability trade setups. And we find those, of course, by identifying institutional involvement. I also look at market internals to see if the market is bullish or bearish as far as the internals are concerned, which is the number of stocks that have up volume versus the number of stocks on down volume. And we just take that into consideration. And then I do further technical analysis on that. So those are the stocks, the stocks that we're going to be taking, and they will tell us which ones we're going to trade, and those will go to you. This is a equity curve for the alert service from I guess a year, and this from March of 23 to June of 24. Yeah, this is based, by the way, on $2,000 invested in each trade that we took on the alert service. I have to create a graphic. I need some sort of baseline, so I used $2,000. Obviously, you use $1,000 per trade is going to be less. $4,000 a trade is going to be a lot more, and you're probably going to vary the amount you put into a trade, so that's going to make a difference too. But this just gives you a baseline of $2,000 in each trade. This is how we did, and this is pretty consistent year over year, which I'll show you as we go along here. All right, so before I get into any more of this stuff, I want to go over options because I know a lot of people want to know about options. I'm going to spend probably about 10 minutes here just talking about options and some basic stuff here. So the first thing I'm going to talk about is what's called an option chain. For anybody who's never seen an option chain or not really familiar with it, this is Bristol-Myers. It's back in March, but this is an option chain. And the key things here for anybody who's trying to trade options is the dates across the top here are called expiration dates. These are expiration dates. You notice they have them, Bristol-Myers has them weekly. Some stocks only have them monthly, but Bristol-Myers has a weekly expiration date. So these are the expiration dates. The middle column is the strike price. What is the strike price that we're going to take our option at? So if you look at Bristol-Myers here and you see what the price was, it was $53.79 at the time. So you see the shaded column right here that says 54. That's considered an at-the-money option, right? That's considered an at-the-money option. So if we were buying calls, this is the call side. If you're buying puts, this is the put side. But on the call side, if you notice, the 54 calls have a bid. This is the bid price, 61, and an ask price for 66. So anybody who's trying to get into the trade, they're trying to get in as cheap as possible. Anybody who's trying to get out, they're trying to get out with the biggest profit. So this is how much is bid, this is how much is asked. Most likely going to get filled somewhere in the middle. You probably get filled somewhere between 63, 64 cents on something like this, which by the way is actually $64. These each one of these represents 100 shares, so it would be $61 to $66. So that's the bid and ask, and that's what's called the bid and ask spread. Okay, that's the spread that you get on the options. Now, one other thing that's on here is this column right here, which is called delta. This delta right here, you notice this says 52. So at the money options are typically going to have deltas around 50. You know, I'll just tell you quickly, a delta measures how much the option price moves versus a dollar move in the price, the stock price. So if Bristol Myers stock went up $1, then this $54 call would go up by 52 cents. And if you notice on the put side, the 54 put, you notice we have a delta of 48. You notice that the 52 and 48 comes out to 100. They're always going to come out to 100. So that is what the delta is. Now, if we move this way, we move up here. So if we go from 54 to 52, 52.50, this would be considered an in the money option because the stock price is higher than that call, right? So that's an in the money option, and you notice the delta is higher. So if you buy that 52.50, if the stock moves up $1, you're going to get a 79 cent move versus the 52 cent move. So you have a higher delta. So as you go in the money deeper and deeper, you see the deltas go up. As you go out of the money, the deltas go down. So the stock's going to move less and less because the strike price is higher than what the stock price is at. And it's exactly the opposite for the puts over here, right? So that's what a option chain looks like. Now, one other thing in the option chain that over here I have what's called OI vol. This is the open interest in the volume. This is of interest. This tells you if you're looking at the 54 calls here for Bristol Myers, we have two numbers here. We have a 643 and a 1004. 643 is the number of contracts that have traded today on Bristol Myers. Now that means bought and sold. This doesn't tell us how many were bought, how many were sold, but it tells us that 643 have been traded. The 1004 tells us what the open interest was at the beginning of the day. Open interest does not reflect the 643 today. It only reflects how many contracts were outstanding when the market opened in the morning. And then it will be adjusted again tonight, for the next morning, and it'll reflect all the adds and subtracts off of that. So this is the open interest. The reason this is kind of interesting is because the higher the open interest is, the easier it is for you to get in and out of a trade. And the higher the open interest, you're likely to see a much tighter spread on here. If you had a stock that only had 10 open interest on here, if you looked at the strikes here, if you looked at the bid-ask spread, you might have a bid-ask here of 52 and $1. I mean, it may be very, very wide. So that's why the open interest and volume is important. All right. So as we go through this, I'm gonna talk a little bit about options. We're gonna cover everything, but I'm gonna talk about what options are, what makes up the option premiums. We're gonna talk about intrinsic versus extrinsic value. This is very important, and it's related to the delta. We're gonna talk about some of the Greeks. I'm not gonna go into all of the Greeks. We're talking about strike price and expiration date, which we just showed, and I'll talk about the best ones to take when you take an option. What's the best kind of a strike price to take? How far out in time? Where's the strike price be? Where should it be in relationship to the stock price? And then we talked about volume and open interest. You did already. And I'm going to go over our primary option trades that we use in the room. All right. So we also going to talk about. I'm going to show you if you like a stock bullishly. I'm going to talk about all the option strategies that are bullish. We're going to talk about all the option strategies that are bearish, and then we have neutral option strategies. And I'm going to talk a little bit about the option trade setups. I'm not going to get into a lot on that. And I do have videos on all of these things in the room, so you can find out anything about options you want to know. Also, all the strategies that we take. All right. So what are options? Well, what you've got is you can have calls and puts. You can buy or you can sell. You can buy a put or a call, and you can sell a put and a call. So you can always buy or sell. When you buy, you are long a call or a put. So if you buy a call, you're expecting the stock to go up. That's what, so it makes, it's a long trade. I'm buying a call. If you're buying a put, you're expecting the stock to go down. That's why you're long, you're long a call or long a put. If you sell a call or sell a put, you're short a call if you sell a call, and you're short a put if you sell a put. And I'm going to talk about this a little bit because this is extremely risky unless you put them inside of a spread. I would just say if you're new to trading options, don't ever sell calls short, ever. And for the most part, you don't want to be selling calls a put short either. So again, buying a call is bullish, selling a call is bearish, buying a put is bearish, selling a put is bullish. All right, so those are that's what options are. We do have what's called rights and obligations, which I'll just touch on briefly. When you buy a call, it gives you, as when you're buying something, it gives you the right to buy that stock at that price. If you buy a Microsoft $100 call, then you have the right to buy Microsoft stock at $100 a share. And that's easy. You don't have to. You can if you want to. That's your right. If you sell a call or sell a put, you're obligated to supply somebody else with the stock at the strike price that you took. So if you sell a Microsoft $100 call and Microsoft goes up to 120, you're obliged to sell that stock and sell that person that stock at 120. You're required to take the $100 put that you call that you sold and exercise it, and you have to buy the stock then at $120 to give it to them. And you, of course, are losing $20 a share when you do that. That's why I say it's very dangerous to do that. But the point is, if you're going long calls and long puts, you have the right to buy the stock, and if you have a right to sell the stock, and if you're selling calls and puts, you're obligated to somebody else, right? So that's the setup on puts and calls. And obviously, every option trade is made up of puts and calls or some combination of. Okay, so what makes up an option premium price? When we look at a premium price, we just looked at that 61 cents on Bristol Myers. It's important to understand that the options can be at the money. Like I showed you, that $54 call for Bristol Myers was at the money. They can be in the money. So if Bristol Myers is trading at 54, any price below 54 would be an in the money, and anything above 54 would be an out of the money, right? So that's just terminology you need to know. So what makes up an option price? It's made up of the stock price itself, what's called intrinsic value. Intrinsic value is if I buy a stock's trading at 55 and I buy a $50 call, the stock is $5 in the money. In other words, I'm buying a call, it's actually less than what the stock price is. So I've got $5 of intrinsic value in that premium that I paid. So if I buy a $50 call and the stock's at 55, it's going to cost me $5, plus it's going to have some additional premium, which is going to be implied volatility and time decay. These are the other two things that go into making up an option price. So that's how we know how much value we've got in there, and we want to have the intrinsic value as high as we can on an option that we take. All right, so again, here's just to kind of go over intrinsic versus extrinsic. The intrinsic value of an option price is the in the money value. So a $50 option on a $55 price. In other words, if we buy a $50 option, the stock's trading at 55, we have an intrinsic value of $5, just because the stock is trading $5 or higher than that. The extrinsic value is the option value minus the intrinsic value. So if we had to pay, let's say we had to pay $6 for that option, and we got $5 of intrinsic value, that extra dollar that you have to pay is called extrinsic value. All right? You don't want to have a lot of extrinsic value in your options, because that's what is subject to time decay and volatility changes. So if the option strike is out of the money, the entire option price is made up of implied volatility and time decay. So I will tell you that when you buy an option, a put or a call, you want to make sure it's in the money. And I typically try to buy deltas of 65 to 75. All right, so again, it's important the volume of the options traded at the strike price and expiration date as well, because we talked about that. The more volume you've got, the easier it is going to be to get into the trade and get out of the trade. All right, the Greeks will talk just here briefly again. Delta, which I've touched on, how much the option price moves in relation to the stock price move Stocks moves $1, delta of 50 means the option is going to go up 50 cents. So as the stock price goes up, the delta will continue up. So if the stock moves up a couple of dollars, your delta may go to 60, which means the next time the stock goes up $1, you'll get $60 per contract, or 60 cents per option. The other one is theta, which is time decay. This is important. The time decay is based on the expiration date. How far am I away from the expiration date? The closer you are to the expiration date, the faster the time decay is going to be, because the stock has less and less time to get to the price you want it to go. So this is a decrease in value of option price as expiration date approaches, and this is not a straight line. If you go out 4 weeks on options, this time decay is going to accelerate, and the last week is where most of that time decay is going to come out, and then the last couple of days it's really going to come out fast. So there's a lot of strategies that use this as a criteria. If you're doing a credit spread, this is what you're doing. You're capturing time decay by selling time to somebody else. And then gamma, which is the rate of change in delta. If a stock's moving up fast, extremely fast, then the gamma will go up, and the change in delta could go up really quickly. So if a stock, let's say a stock moves from 101 to 102 in a half an hour, the delta may only go up by 1 or 2, may go from 50 to 51. If the stock moves up $6 or $7 in 10 minutes, the gamma is going to go much higher, and the delta, instead of going up by 2 cents, by 2 points, might go up by 10 points. So the gamma is how fast that option delta is going to change. So it makes a big difference. Okay, especially important on stocks when they're ripping up in the morning. If you look at a stock that's gone up, you're looking at it's gone up 60% in the first half an hour, the gamma is going to be huge. It's very bad to try to get into a trade like that, because of the fact that once the stock settles down and starts going sideways, the option price is actually going to come down, even though the stock price hasn't come down, because the gamma is coming down and the delta is going to drop. All right. So these are the primary option strategies. I'll tell you the ones we mostly use. Long calls and puts. We do put credit spreads or call credit spreads. We talked about that. I do put debit spreads and call debit spreads. Again, these are stocks. These are defined risk. Everything is a defined risk. You can't lose more than what you put into the trade. Same thing on the time spread. You can't lose more than what you put into the trade. There are strategies called condos, which I don't use, which is looking for stock to stay within a certain range. And then as we have a thing called butterflies, which is where you try to basically pinpoint where a stock is going to end up at expiration date. And these are interesting, because you're basically trying to, they give you a really big return, 10 to 1, sometimes 15 to 1. But you've got to pick it directly where the stock price is going to be at near expiration. So they're called butterflies. And then strangles and strangles, which I do. This is where you're looking for stock to either make a big move up or a big move down. You don't care which way. You can do a strangle or a straddle. If I was doing a strangle on Microsoft and the stock's trading at 100, if I strangled it, I would buy a $101 call and a $99 put. So the stock's trading at 100. I've got a $101 call, $99 put. I don't care which way the stock goes. I only care that it moves a lot. And a straddle is the same thing, except if I have Microsoft trading at 100, I'd buy a $100 call and a $100 put and look for a big move. All right, so these are non-directional trades. Condos are basically non-directional trades. They're looking for the stock to stay in the same range, and calendar spreads are non-directional. All right, so here is your just kind of a little cheat sheet on options, a little cheat sheet on bullish and bearish strategies using options. So if you have a stock that you like bullish, here's the options you can do. You can go long a call, you can go short a put, which you shouldn't do, not by itself. You can do a put credit spread or a call debit spread. Those are all strategies that are long for options. We also have bearish option strategies. You would be long a put, short a call credit spreads, or put debit spreads. So you can see it's the opposite of these. That's a bearish options. And neutral, as I said, condors, straddles, strangles, and time spreads, or calendar spreads. These are neutral strategies. You're not really caring which way the stock is going to go. All right. So that's kind of a little cheat sheet on options. And these are the strategy setups. I'm not going to spend a lot of time on this. I have videos on all of these, but put credit spreads, call credit spreads, put debit spreads, call debit spreads. This is what you do. The calendar spread is kind of interesting. These are what we do over earnings. We sell a put or a call at or near expiration date. So we could sell a call for this coming Friday, and then we buy a call for the following Friday, and that creates a time spread. So that's what it is. It's a specific calendar spread. And again, a triangle straddle, I just talked about that. All right, so those are the strategies on options. Choosing the best options, this is what I recommend. When you're trying to buy an option, put or a call, the strike price, you really want to take a look at the delta on it. You want the strike price to be in the money. You want the delta to be somewhere between 65 and 75. So you've got some intrinsic value built into the option. So you take a strike price that's in the money. So if you were buying $100, Microsoft's trading at 100, you want your strike price to be below 100. You want it to be 95, 96, 97. Those would be in the money calls. The expiration date, I always recommend going out, even if you're just day trading. Let's say you're on Thursday and you're taking a day trade. You're just going to expect to get out today, and it's going to be an option. I would still go out to next week on the expiration date. I always go out at least another week, even on a day trade. Now, if I think I may hold it overnight, I'm going to go out 3 to 4 weeks at least on the expiration date, because we don't want to. Again, it's the time decay problem. If you're in the stock at 10 o'clock in the morning and it's going sideways, by 3 o'clock in the afternoon, the price has gone down because of time decay. If it's this week's, it's going to go down a lot more than if it's next week's. So that's why the expiration date should be at least a week out, even on an intraday trade. And then the delta, as I said, 65 to 75 generally. You want to just look and find the expiration date and strike price that gives you a good delta and also gives you a good bid-ask spread, so you're not overpaying for the option. All right, so that kind of covers options. What I'm going to run through real quickly here is I'm going to run through the trades that we've taken in the room and on the alert service, just to kind of recap them. And it's basically meant to show you what our results are like. Also kind of shows you what kind of results to expect. I don't like people thinking that you're going to get 3, 4, 5, 600% on trades. You read about that all the time. I'm sure you get emails on that. It doesn't happen. I mean, you can get a trade that you get 200 or 300%, but you can't make money going for that kind of profits. The profits that are basically, you grind them out 10, 20, 30, 40% on a trade. And you can see that's what we got here in January. These were all the trades that we took in the room. We did have a nice run in Boeing of 96%, but generally speaking, they run in the 20s, 30s, and 40s. So a January trade results 20 wins and 2 losses, 90% win rate. 2,000 invested in each trade, netted out 75.05. So a pretty good month. February, this was actually our best month so far this year. And I broke out the alerts trades on this as well. But you can see again, 40%, 25%, 56% on Strangle and PayPal, 32%, 32%. So you can see the percentage gains are fairly consistent. And if we're in a trade for a day, if I get in a trade and we're up 30, 35%, close to the end of the day, I'm going to take profits. I'm not going to take the risk overnight if I've got that much already locked in. So February, we had 24 wins and 2 losses, 92% win rate in the room. 2,000 invested in each trade, netted 11.7, pretty good. On the alerted trades, we had 20 wins and 2 losses, 2,000 invested in each trade, netted 69.30. So a little bit less than the room because I can't put all the trades out on alert. There's reasons for it. I can't put out alerts on trades that I take like a quarter of 4 because it doesn't give the alert members time enough to put the trade in. And if I take a trade during the day that I think is going to be really quick, maybe half an hour, I'm not going to alert on it. It's too fast. And that's why I can't alert on the SPY Super System trades. But other than that, anything that is likely to last most of the day, or certainly anything overnight, are all going to be alerted on. That's why time spreads are always alerted on, and credit spreads are always alerted on. This was just kind of recaps the 2023 results. We're getting pretty deep into 2024 now, but this was 2,000 in each trade taken in the options room, produced a $60,000 profit. Pretty good. And I just said, if you had a $50,000 account when you started the year, putting 2,000 in each trade would have used 4% of your account. By the end of the year, the account had grown to 110,000. So 2,000 per trade was less than 2% of the final account's balance. So that was our 2023. We're on exactly the same pace for 2024, by the way. This is our first quarter of 2024. A trading room, 65 wins, 11 losses. 86% win rate, 18.7 on 2,000 per trade. Alert 41 and 6, 87% win rate, 12,002. And you know, you'll see these win rates. I mean, I've had some that'll drop down to 80 or 78, sometimes, pretty rarely though. This was the second quarter here, 65, 14, 83% win rate, 14.8, 35 and 6, 85% win rate, 11.7. So these are pretty consistent results here. You see, if you add up what we did the first quarter, 18.7, and what we did the second quarter, 14.2, that's about 33,000. That's going to be a little over 60,000 for the year, same as we did last year. All right, so these are the May trades. Just again, just kind of go over the trades so you can see the percentage. So these were time spreads. We had a lot of earnings in May that we were taking, so we got a lot of time spreads, but you can see it producing pretty good results. 30, 40, 38, 60% here. We had a loser, and it's important to understand we have losers. I think I've only had 1 month in 3.5 years, and 2.5 years that I didn't have any losers in a month. So here we had 15 and 2 in the alerts, 88% win rate, 4,900, and May 29.7 on the in the room, and 81% win rate, 57.36. So I won't go. You can see I just wanted to show, trying to be transparent and show what we do every single month. But I'll skip past some of the other ones. Here, there's June trades. You see, we had a nice month in June. We had a decent month in July. And I only had a 75% win on alert trades. This is the lowest win rate I've had ever since I started the room in 2022, but still $3,300 profit. And it's August, and I've gone through August. I haven't done September yet, but we didn't have a lot of trades. 17 and 2. August is a tough month. It always is because it's so slow, but still decent wins here. Now on the alerts, just so you understand, they're going to come out SMS alerts. You're going to have you're going to get a stock symbol. You're going to get an option strike price. Obviously, you're going to get an expiration date, and you're going to get the price to pay for the option. That will show up on the alert. It may be a range. It may say, 85 cents to 90 cents or something like that. And you're going to likely get at least 2 alerts for each trade. Typically, I'll put it on an alert when we get into the trade, and then I'll put another alert out for when we're going to get out of the trade. And so I do them separately because I want to watch the price action and find out how close we are to resistance, what's a reasonable expectation based on what the market's doing. So you're going to get another trade or another alert to tell you when to exit the trade. And if we have to take loss, you'll get an alert on that as well. And I will recommend that when you get your closing trade, you want to put a GTC or good till canceled on it so that it's working when the market opens in the morning. All right, so I want to just cover here quickly how we achieve these kind of results, because these are pretty good results. 85, 90% win rates, pretty hard to do. But again, we're able to identify when institutions are driving a trade. We've talked about this, and when the market internals are heavily bullish. So I said here we only take trades when both of these are in our favor. That's not 100% true. If the institutions are in the trade and the internals are neutral, I'll still take the trade as long as the institutions are in the trade. And how does the Compass system do this? I'm not going to get into a lot of detail on this, but it's doing what's called triple screen assessment, or a fractal, multi-time frames. It's looking across multiple time frames on momentum, trend, and money flow. And if all of these are going up, for example, bullish on multiple time frames for momentum, trend, and money flow, then the likelihood that the institutions are what's driving that price is pretty high, 97%. And again, we're looking at 3 time frames, for example, on the 5-minute chart. We're looking at the 5, the 15, and the 45. The likelihood of momentum going up on all 3 of those without having institutions do it is very, very unlikely. All right, so this just kind of looks at what the Compass system looks like. This is just a Tesla trade we took, but what you're seeing on here is the indicators that the Compass system puts on your Thinkorswim platform. If you become by the Compass system, this is what you get. You've got, this is long-term trend. This is multiple time frame momentum. This is important. This is current time frame momentum. This is important. And this is money flow. This is derivation of money flow. These are the 2 that I look the most at. Current time frame trend, multi-time frame trend. Red and green blue and green are bullish. Red and yellow are bearish. When I look at a trade like Tesla here, it's a 5-minute chart. I know the institutions are buying the heck out of this stock. It doesn't really take a lot to know that. but this was kind of one we took here, but just so you can see that. And there's some other things on the Compass chart that I'll show you as we get into the trades. Now, I want to talk about the SPY super system because I've had a lot of interest in this, and this is only done on intraday trades for the SPYs, the Qs, and the IWM. And these are the results I've had. And I've been doing these a long time, but I never really introduced them into the room because most of the trades we were taking were, you know, 6 hours, 7 hours, overnight, 3, 4, 5 days. These are all really quick trades. Most of these are only going to last 3 candles, 4 candles, 5 candles, maybe 7 candles, 5-minute candles, but they're not going to last a long time. So this was the July super system when I started it to actually quantify it. In the middle of July on 16 and 0, 25.96. August we were 56.6 and 2. See, there's a lot of trades. And by the way, these profits are not included in the profits that I showed you just previously. This is completely standalone. But in August, 56.6 and 2, 2,000 invested in each trade, 82.01. In September so far, we've had 9 trading trades, 24.3 and 1, 2,000 invested, produced a 42.65. So pretty good. You know, a lot of the profitability is going to depend on how the market's going, how long you can stay in the trade. So you get a trending day, you can stay in a lot longer. Choppy day, you won't stay in as long. But the real nice thing about this is with the SPY super system, you're only going to be in one trade at a time. So you're not going to be managing a lot of trades, and they'll be very short duration. So I have a lot of people that didn't want to be in the room all day, but they wanted to take some trades more than just what we did for the alert service and you know, the trades that sometimes we have to wait several hours to find. So they come into the room now and they trade the SPY super system, and they can, you know, they can make some good profits and leave and come back again later, be in for an hour or 2 hours and come back and later in the afternoon for another hour, and they can make multiple trades and they can do pretty well on this. So I'm going to show you how the setups work on this. They're fairly obvious. This is a SPY. This is a trade we took on 8-9, and I've identified here. See how busy the chart looks, but there's only 3 things you have to look at. 4. You have to look. This is the current time frame momentum. See that arrow pointing to that? See how this is blue and it was red? So this went from selling to buying. So this tells me the institutions on the current time frame are going from selling to buying. Right here, that going to red to blue. So I'm looking for a blue or green for bullish. So I'd like to see a change from red to blue, but it could have been blue all the way along. But I know here they went from selling to buying. Now, the other thing I'm looking at is this VWAP. See this volume weighted average price, this pink line? This is a support level or a resistance level. So I'm looking to enter this when the stock price has gone to bullish, the institutions are buying it, and it's breaking through the VWAP, the volume weighted average price is breaking out. It does it right there. All right, so this is where I took the trade. And you see it stays above the VWAP, and this little green line in here is the 15 EMA. That's the other support resistance level that I use, right? Because sometimes the stock price will be well above the VWAP, so I'll use the 15 for my support resistance. But here we jumped in here as it went from red. See how it's easy to identify. Institutions selling, institutions buying, popping up out of a box. Now you get these pink arrows the Compass system produces. These are called pop symbols or pop out of the box symbols. This tells us when the stock is breaking compression. You'd really like to get in as the stock breaks compression. See how close we are to the VWAP? If it broke down below the VWAP, we wouldn't be taking much of a loss at all. And it just round right up, round right up, round right up. Now I'm starting to get suspicious when I start seeing wicks and tails like this, and I exited right here. But that was $220 a trade, $220 a contract on that SPY super system trade right there. But here's your Compass system, and if you get the Compass system, all of the stuff is gonna, your system's gonna look exactly like mine. You're gonna have all of these indicators on your chart, plus you'll get some scanners and stuff. But anyway, this is what you're keying on: current time frame momentum, VWAP, and on the 15. And if you get a pop signal, you don't have to have the pop signal. So that's all you're looking for. Even though this looks really busy, 1, 2, 3 things to look for. That's it. All right, so here's a couple of other ones we did. This was on 8/23. This was pretty recent. Here you can see the VWAP, and you can see the stock breaking down. You see the big red arrow right here? See how the current time frame momentum is yellow? That's bearish. So the stock's breaking down. It's breaking down below the VWAP. This is where we took the trade. Now, it doesn't do a lot right there. It just kind of moves along. Now, notice it stays below the 15, though. This 15 is this little thin red line. So as long as it stayed below the 15, I stayed in the trade because everything was still red here. They were selling, selling, selling. So I just ride this sideways, and it didn't go anywhere for long. And then we get a flush, and the stock flushes down. It goes right along this white line and flushes again. And this is where you go out right here. And again, $280 profit per contract. Now that was a fairly long trade for a SPY super system trade. That was probably maybe an hour and a half. So this is a pretty long trade. But you could have gotten out anywhere here. But that's the SPY super system. Again, here's your current time frame momentum being bearish, yellow and red. Here's your breakdown of the VWAP right there, and you just take it and write it on down. This was one more that we had here. This was, I forget what date this was on, but this was similar setup that we, in fact, this looks like exactly the same setup that we took before, but it's the same kind of a thing. It's going red to blue, buying here above the VWAP. One other here, this is another one. We went red and then we went blue. So the institutions are buying here, but the stock's just moving sideways. I'm looking for a pop above this pink line, above the VWAP. And you take it right there, and we ride this up. We rode this up, and get out right here for $250 a contract. That was on 8/23, fairly recent. So here's another one here. So you can see the setup on here where you're going from red to blue, bearish to bullish, breaking above the VWAP right here. You take the trade and up it goes. And as soon as it starts to lose momentum, you get out. IWM, another strong trade right here. If you look, see it's kind of flat going back between green and yellow, but we get a break right here. I'm not sure where I actually took this. I probably took it right in here as it broke above the 15, and then just ride this thing up. It didn't go very fast, but still was pretty nice. This was a nice SPY trade here. See how it breaks down below the VWAP. See how it's red. You write it down. This was only a 3 candles. 1, 2, 3, and you're out. And then you could have gone long here if you wanted to. As it broke back up again from red to blue, you could go long above the VWAP and then ride this thing up. And this white line is called a pivot point. It's important to know about that because that is a support and resistance level. So if you were in the trade, you'd be watching it closely as it got near that pivot point and be prepared to exit. And this is another SPY trade here. Again, where we took it right here, see how it breaks below the 15 right there, comes down, and just take it for a few candles. All right, so this is the SPY super system. You can see if you've got the compass system, and I keep this, by the way, the compass system, I keep this up in the room all day long on the SPYs, the Qs, the IWM, so you can always see if there's any compass system setups. But here we go from selling to buying, and it continues to buy, but it's noticed it's below the VWAP. I'm not going to take it till it gets above the VWAP. There it is right there. We take the trade right there, and there's your profit. All right, so I want to cover some charts, some regular trades that we did outside of the SPY super system. And again, the SPY super system profits that I talked about are not included in the room profits. They're completely separate from that. So these are some recent trades we took. This is Lulu. This is a daily chart for people that like to trade longer term, perhaps swing type trades. You can see here that you see how we've got multi-time frame momentum. It's chopping back and forth, but it goes from blue to yellow right here as the stock breaks down off of this compression right here. It breaks down right here. So we took this overnight, and we entered for $1.92. We get out for $3 the next morning on this trade right here. And again, you notice everything else is red, so you can see the institutions are selling Lulu. This was workday. This was another daily chart where we took this. We're in this for 5 days. See how it's chopping back and forth here. The current time frame was nice. We got institutions buying right here, kind of flipping back and forth because we moved sideways. But I took it right here anyway because I like the setup on it. I like the technical setup on it, and it's coming out of this shaded area, which is called the dynamic compression zone that the compass system produces. All right, so that rode that up there. Let me just pop out questions for a second here. How can the delta be over 1 for the calls? It can't really. It's only 1. It has to be typically, unless they've got something in the option chain that's wrong, it's not going to be over 1. For call ranges, it should be between 0 and 100. I might be wrong. No, everything should be no more than 1 or 100. what profit gain percentage is ideal to take profits? That's a really complex question because it depends on what the market's doing, where my resistance levels are. I'm going to take profits when it gets close to my resistance level, or if the market is chopping all around. If you've got a market that's choppy during the day, you're going to have to be much more passive in the targets that you take. And if you've got a trending market that's moving up nicely, then you can hang into the trade, but make sure you know where your support and resistance levels are. All right, so again, this was a workday trade here. Broke out here, we took this, was a pretty nice trade, 5 days, 30%, which is not a lot for 5 days, but it still was a nice trade. And you notice that once it turned blue here, it just stayed on the current time frame, staying green all the way across. GCT, another one here, bullish across the board. Stock breaking out, see the compression. This is a daily chart breaking out here out of this shaded area, the dynamic compression zone that the compass system produces. Take that there, and we were in that for 2 days for 26%. MDT, this is a nice one at 25%. On a swing trade, these are daily charts. Again, see, went from yellow to blue, and this was already green, so we took it there and we write it up, and it went up nicely. BKTX, another quick trade. Everything's green, we know we should be buying. We bought it right here as it popped up. It's a little bit extended from where I actually should have got into this. I should have got into it further back, but I did take it there and got 30% in 3 days. This is a daily chart, so. This is a overnight trade in McDonald's. Get in here, get out here, get in for 8:30 and out for 11:30 the next morning, 37% gain. Right, so there's, again, this is telling you that their institutions are buying this thing, and it's coming out of compression. This is where you want to get in. So we had a pop symbol right here for breaking out of compression on the daily chart. A 5-minute chart, this is a 5-minute chart on Amazon. This was a trade we had intraday. See how the stock is coming along the 15. You take it right here, is everything, the multi-time frame and current time frame are green. These are the ones I key on. And we were in this trade for 45 minutes and made 32%. Everything buying. I'm looking for this break on off this 15, and I take that up. This was a nice 20% an hour on ENPH. You can see the breakdown pretty clearly here. Here's the 15 in the VWAP. The 15 is one of our levels, right? So it's moving sideways, compressing, and then I get it pop out of the box to the downside. That's telling me it's breaking compression. Everything's red. The institutions are selling. I take it here. I'm in the trade for an hour and I make 20%. It just, notice it never even challenged the 15-year. Verizon, this was a really quick trade, 50% an hour on this. The options are really cheap on Verizon. So when you get a move in Verizon, you get a nice move. So it broke below the VWAP and on a pop out of the box symbol, and down it went. Get in. Actually, I remember this when I paid $45 a contract, and we get out here an hour later for $67 a contract. That's a 50% gain, a little more in an hour. And again, it's just, it's really not hard to see. Coming sideways, breaking down, out of compression, everything's red, take the short. And this was a SPY super system trade that I had before I actually started to outline these, but you can see what you've got here. You've got two of them actually. You've got short here coming down, and then you could have gone long right here. I wouldn't have, but you could have gone long right here because we're still below the VWAP and had quite a ways to go, but typically I don't take that. All right, and this was a Tesla. This was an overnight trade in Tesla. This shows me the pop out of the box symbol. It shows me that it was below the VWAP on the 5-minute chart. So I took it overnight, right at the end of the day, and it dropped. It dropped from 120 to 112. Got a little lucky on that one, and get out down here, and the options exploded. $7 or $7.50 profit per contract on that particular trade. All right, so that kind of covers quickly the options. It covers the SPY super system. It covers the methodologies we use, and it shows you the compass system. Again, I could spend a lot of time on the compass system, but if you're interested in it, it's I have a video on the thing. If you come into the room or in the alert service, you'll be able to see it. So again, here's what we do in the room: straight calls and puts, debit spreads using weekly options expiration, time spreads over earnings called calendar spreads, and we do this SPY super system inside the room. These are inside the room. This is not alerted on. All right. So what we have for office here for anybody who's interested in the alert service or the room or the Compass system, we're going to cover that. And I think there's links in the chat box. Yeah, there's links in the chat box to these three offers. So what you've got here is the Compass Options Alert Service, quarterly for $396, annually for $992, and you can get a lifetime for $24.96. Now, if you come in right now, if you're one of the first 10, you take this, we're giving out 2-week free trials for the first 10. All right, 2-week free trials for the first 10. You get a month in my live trading room. We have a Discord chat room where we have 2 other professional traders. Obviously, you'll get the alerts, and then you have access to about 25 or 28 videos that I've got on all the different strategies we use, all the different indicators, and how we trade them. All right, so this is again, if you take the alert service, you're going to get a 2-week free trial just for the first 10. This is a live trading room. If you come into the trading room, again, the trading room is $11.98 for the year, monthly for $148. So that's pretty inexpensive. I don't know that you're going to get much out of it in a month. We do an awful lot of education in the room, but it's for some folks who just want to try it. It's fine. Let's see, Calvin. If you're in the room, do you get the alerts as well? Well, we have it in the Discord room. When you're in my room, first of all, they're going to be posted in the room. So if you're in the room, you're going to see them, of course. And they all get in the Discord room, but I post them in the room as well. I have a pad in there that I post all the trades on, so you'll see them all. They're also in the Discord room. If you're alert service and you're not in the room, you still have access to the Discord room, so you always can see them. All right, so that is the trading room itself. Again, you get the live trading room, obviously. Full year, $11.98. Really, you saw the profits we were producing here, so I think it's a really, really good deal. You will get the Discord instant messaging where you can see all the trades that are in the Discord room, and you'll get the videos, of course, that I produce. Now, for the Compass trading system itself, which you can have it installed on your Thinkorswim. Now, you don't have to trade off of Thinkorswim. I have it on my Thinkorswim platform, but I do not trade off of Thinkorswim. I trade off a Tradier using what a front end called TradeHawk. But you use Thinkorswim just to put the Compass system on there, because that's the trading platform that it will go on. So yeah, that's what you do. Obviously, you don't have to pay for the Thinkorswim, but you do have to purchase the Compass trading option. It's Compass trading system. Now the right line text will put that right on your machine. If you buy it, they'll take over your machine, they'll put it on there. It's going to look exactly like mine. It comes with a whole bunch of scanners, and again, it'll look exactly like mine. So you get that's why they say you get my entire workspace, and you get a month in the trading room, the live trading room, which I trade every day. I usually get in there by around 9:15, 9:10, and then I'm there till 4 o'clock, a little after 4 o'clock. All right, so that kind of covers everything I wanted to talk about today. I know it's a lot of information, but I hadn't been doing the SPY super system before, but a lot of people now all of a sudden are interested in trading the SPY super system because, again, I love it, because when I'm not in a trade or I'm looking for a trade and I don't really have anything I can trade yet, there's no really good technical setups or institutional setups on any particular stock, but I have a nice setup on the SPY or the Qs or the IWM, then I got to go ahead and take those. And if you get into the room or the alert service, I have a video on the SPY super system with all the setups and all the criteria for trading the SPY super system, and it'll tell you exactly how to do that. Where is the SPY super system? It's basically a piece of software. Oh, where is the SPY super system? Well, the SPY super system is basically the SPY super system to buy. Basically, the SPY super system is if you want to do it yourself, trade it yourself, then you have to use the Compass system, because that's where the information comes from. Right? We talked about that before. If we go back here and look at the SPY super system, this is what you're gonna get. It's gonna put the SPY super system on your computer, but it's gonna put the Compass system on there. The SPY super system is just using specific indicators within the Compass system to make those SPY super system trades. All right, so you'd buy the SPY super system, or you'd buy the compass system, and then you would trade off of that. Now, if you're in my room, you don't actually have to hug the compass system, because I keep this up on the up on the charts all day long. I keep the SPY, the Qs, the IWM. I'm going back and forth looking at them. But most people want to trade this themselves. They just buy the compass system, and then they can be identifying these themselves. All right, so that's how you would buy. And again, if you want to trade the SPY super system, you can do it two ways. You can come into the room, and you can just be in the room, because we're going to talk about it in the room. We're going to have all these things up in the room that you can look at. And I mentioned it when I'm going to take a super system trade. I tell everybody we've got a super system trade coming up, and everybody can jump onto it if they want. Or you can just have the compass system yourself, and trade SPY super system off of that. So again, the SPY super system is a methodology of using the indicators on the compass system to find the very highest probability trade setups for the SPYs, the Qs, and the IWM when institutions are in there, and when they're breaking out of when they're breaking above the VWAP or the 15 EMA. SPY is only on the Schwab platform. The compass system will run on it's Schwab. It's actually Thinkorswim. It runs on the Thinkorswim platform. Schwab has got more platforms. Schwab had bought TD Ameritrade, so they own it. So yes, it goes on Thinkorswim. You can also get a variation of it called the Money Flow Tracker, which runs on Ninja. Most people use Ninja to trade futures, but you can trade futures off of the compass system. The compass system will track any particular stock or derivative that you want, whether you're trading the SPY futures or the Russell futures or Q futures. You can do that, or you can also put it on Ninja 8, and it'll run on Ninja. It's called the Money Flow Tracker. It looks different than Thinkorswim, because Ninja presents things differently than Thinkorswim does, but it's available there too. All right. Okay, Carlos, you're welcome. You're welcome. So I appreciate it. Listen, I appreciate everybody taking their Saturday afternoon to go over this. I know it was a little longer. I tried to get through it as quick as I could. I know I've got a lot of information to cover, and I wanted to share all that with everybody. But there's your alert service there, $396 for a quarter, $992 for a year, $24.92 for a lifetime. Lifetime, again, it comes with a month in the live trading room, and the first 10 will get a 2-week free trial. You can take a free trial and see how it likes. I mean, it's hard to know how many trades we're going to have and how many good ones we're going to have. I don't know. I don't know if trades are going to be good until the trade's over. I got to find setups, so I have to take a long time. Well, we have problems with day trading rules. If you're a PDT, if you're under pattern day trader and you don't have a margin account, if you have a margin account, yeah, you're going to have trouble. But if you're trading the futures, if you're trading the ES, the NQ, or the IWM futures, the /ES, NQ, and RTY, then it doesn't fall into those. But if you're trading the regular SPY, Qs, and IWM, then you have to have 25,000 in your account as otherwise you're a pattern day trader, or you can have a cash account, and which usually those don't clear for a day or so till that when you close the trade. So yeah, but anybody who is up against day trading rules, PDTs, the other trades we take in the room, such as the time spreads, the credit spreads, most of the trades are going to be long. The thing with the trades, like if I take a day trade in the room, remember I said that the daily chart has to be bullish. If I take a bullish trade and the day trade and the daily chart is bullish, and I get out in the afternoon, and you can't get out in the afternoon because you're up against your PDT rules, you can still hold it overnight, because the reason I took it was because it was set up to be an overnight trade. Now, it may go up the next day, it may go down the next day, but a lot of times you'll still make good money on it. In fact, you may make more money on it if it moves up the next day. So when I take a trade, they're all constructed so they can be taken overnight. So anybody who's under a PDT rule doesn't have to close the trade out that day if they can't. Okay? Okay, Joe, appreciate it. All right, everybody, thanks very much for spending some time with me today. I appreciate that. Again, there's your alert service. There's your trading room. Again, I'm in there every day from 9:15 to about 4. We do a lot of education there. Anybody who's looking at the trades, I answer questions all day long, bring up charts of in particular trades that people are looking to get into, particular stocks they're looking at, and I go over a lot of the technical setups that I look for, some fairly deep technical analysis, trying to help everybody become better traders. And we do call out the SPY super system trades as they occur. All right. So listen, thanks everybody. I appreciate you being here. I hope you have a great weekend and look forward to seeing some folks in the room and on the alert service on Monday. Have a great weekend.
Absolutely incredible. David Wyse, you did it again. Those SPY super system trades, along with the information you shared, are extremely powerful. Ladies and gentlemen, if you want to receive 14 days of free SPY super system trade alerts on trades that have a 90% chance of being profitable, whether the market goes up, down, or sideways, professional options trader David Wyse of Right Line Trading has made an extremely generous offer for our audience today. This is one of the hottest alert services out there, so you may want to give it a try. We've placed David's special